Hi, I'm Sharon Winsmith, a tax attorney, active investor, and your go-to resource for proven investment and tax planning strategies. In this video, we're going to talk about 6 examples of assets that you could buy and use the buy, borrow, die tax planning strategy. So if you don't know what the buy, borrow, die tax planning strategy is, I'll link to my video below where I explain that strategy. It is the most important tax planning strategy out there. Yes, that video is long. Yes, it can be kind of repetitive at times, but you have to know that tax planning strategy if you want to get serious about building wealth. This is the strategy that people like Jeff Bezos and Elon Musk use to become essentially billionaires without paying a dime of tax. And you yourself can use that strategy. It really doesn't matter how much money you have. What matters if you understand what you're investing in and educate yourself, understand how the strategy works and the types of assets that are good assets to use for this strategy. So a lot of people like to say that you can't do buy, borrow, die because there's no company or no asset that you want to own for life. So that is actually wrong. We have been using this strategy for years. This is not something I made up. This strategy has been around for a very long time. This is the strategy that the uber wealthy use in order to make smart investments and the best types of investments and use the strategy in a way that you're never paying tax on the future appreciation in those assets. So I want to start by saying that these 6 assets are just examples of what you could think about investing in. I am not telling you to go out and buy these assets. I am merely telling you that these are 6 examples of assets where you could think about investing in these types of assets and using buy, borrow, die with that investment. So you need to do your own research. Just because something is an investment that's smart for me doesn't mean it's smart for you. And this is just my opinion of types of assets you can consider doing buy, borrow, die with. So with that said, I'm not going to spend a lot of time reviewing what buy, borrow, die is. Again, if you don't know, you need to watch that long video on, what the strategy is and how it can work in practice. But just a quick refresher for those of us who are familiar with the strategy, buy, borrow, die is really just a 3-step process. You buy an asset that you can own for the long term. You, instead of selling that asset and having taxable gains when you sell that asset, you are going to borrow against that asset. Step 3 is that you die while still owning the asset because your heirs, whoever inherits that asset, is going to get a step up in basis. So it is a brilliant tax planning strategy. It can allow you to own multiple assets and invest in multiple things with the same money. And it can also allow you to get the benefit of significant amounts of appreciation over your life, be able to access liquidity, by borrowing against that asset and accessing some liquidity of that appreciation, and die so that you're never paying income tax on that asset. And your heirs are going to get to step up their basis so that there is no taxable gain at the time of your death in that asset. So all the appreciation that happened during your life just escapes income taxation. This is an income tax planning strategy. This has nothing really to do with an estate planning strategy, but you can do this and avoid paying any income tax on your investments if you do this right. So with that said, this should be kind of obvious, but the best assets in general, whether you're doing buy, borrow, die or not, in my opinion, and the opinion of the greats like Warren Buffett, are assets that you can own forever. Warren Buffett has said repeatedly that the best assets are the assets that he can own forever. The key here with buy, borrow, die is to look for sustainable assets with steady appreciation over time. I do not care about temporary downturns. Yes, I am aware there are black swan events. Yes, I am aware there are, recessions. That is just a fact of life. We are going to go through another recession in our lifetime, probably several more for most of us. I don't care. I don't care, if I'm using my stock portfolio, for example. I could care less what the value of that portfolio is tomorrow. I could care less what it is the next day. What I care about is what is the value of that portfolio when I die? What is the value of that portfolio 20 and 30 years in the future? Because it's going to steady appreciate in time. We don't care about temporary downturns with buy, borrow, die. The only reason why you might care about a temporary downturn is if that creates an issue with your loan. So for example, if you're using stocks and you have an SB lock, against your stock portfolio, a significant downturn in the market could trigger a margin call. So you need to watch out for that. But other than that, from just a philosophical standpoint, I don't care what the value of that asset is today. I care what it is, far into the future because I'm not selling it. You want assets here that are always going to be relevant. We'll talk about that a bit more in connection with the 6 specific assets that I'm going to talk about that I think could potentially be good candidates for buy, borrow, die. But I think a lot about when I think about what assets will or what investments will be relevant. When I was growing up, anyone who's younger than me is probably not going to have ever heard of Napster. But Napster was this technology that, we used to use as kids to illegally burn CDs when that was a new thing. So it was widely popular, when we were using Napster to burn CDs and to listen to music online and that kind of thing. But then it went bankrupt, right? Because it's not relevant. It was a fad, right? It was really popular for a small amount of time, but then it went out of business. So think about like one hit wonder songs, they can be the most popular thing today can be completely, just irrelevant weeks or months or years from now. So just because, what is the great investment right now, that might not be a great investment 10, 20 years from now. So you want to make sure it's something that's going to be sustainable and something that is going to be relevant for a very long time. So again, I'll talk a little bit more and touch on those points a little bit more when we get into the specific types of assets. So I'm just going to run through 6 assets that, again, these are my opinions of things I think could be good candidates for buy, borrow, die. It doesn't mean it is for you. You need to educate yourself. I'm not telling you to go out and buy these things. I'm just saying these are things in my personal opinion that could be good candidates for buy, borrow, die. And for most of these, not all of these, but for most of these, I have used these investments myself for buy, borrow, die. Some of them are not quite ready yet, like cryptocurrency, but we'll talk a bit more about that when we get to that one. So to start with, anyone who's listened to my videos is not going to be surprised about this. When I talk about investing in the stock market, I'm not a fan of the stock market in general. I think the returns are too low to justify, the investment itself. It's not tax efficient because you have capital gains and you have dividend income. So, yes, capital gains income is taxed at a lower rate, but that's still a really high rate of tax. So don't fall for the misconception that capital gains is a beneficial rate of tax. It's still a significant chunk of your appreciation that's going to be paid in taxes. What I do like about the stock market is that I can do SBLOCs. If you don't know what an SBLOC is, I'll link to my video below. That is a strategy where you can borrow against your stock portfolio. It can be called SBLOC. It can be called margin loan in some cases. This is not the same as trading on a margin. I'm not talking about where you leverage up and, do 2-for-1 or whatever. I'm talking about you own a stock portfolio and you are going to borrow against that stock portfolio with the stocks as collateral. So don't get that confused with margin trading. People like to say it's the same, at the end of the day, it's the same thing from a tax and financial standpoint. That is not true. It is definitely not the same from a tax standpoint. And it is a very different thing than, using buy, borrow, die to take an SBLOC to invest in another type of asset, for example. So I don't like stock picking. I don't think it works. I think that's pretty well settled by, if you look at statistics and trends and history on that. I like to invest in stocks that I'm going to be able to own forever. So, I could go out and pick stocks like a financial advisor does. Maybe they're great investments today, but do I want to own them 20, 30, 40, 50 years down the line? Probably not. And I have no clue or any way to predict that. So what I like to do is index funds, and I like S&P 500 index funds. This is recommended by Warren Buffett. So, what I like to do is invest in an S&P, a low expense ratio S&P 500 index fund. And then I, use that for the buy, borrow, die strategy. So not telling you to do that. That's just a good, I think, investment, because while I wouldn't necessarily want to own individual companies, for example, look at, Tesla or something like that. Tesla might be a good investment. It was probably a better investment several years ago, but might be a good investment today. But is it going to be a good investment several years in the future? I don't know. I don't even know if that company is going to be in existence in the future. So what I am happy to own indefinitely is the S&P 500 index fund. So number 2, large cap stocks. So when you're thinking about stocks that you want to do buy, borrow, die with, you obviously, you need to understand the risk with the buy, borrow, die strategy. You don't want to invest in stocks that, could be extremely volatile. So small cap stocks, like for example, if you read about how the Peloton founder used an SBLOC and borrowed against his shares in Peloton and got himself in a lot of trouble and, lost obviously a lot of money from that because it didn't go well. That was a really bad way to use the strategy, right? Nobody's going to use that strategy who really knows what they're doing. But some people do use this strategy to borrow against large cap stocks because they view that as more safe. So for example, maybe I'm happier to own Coca-Cola for, 20, 30, 40 years from now, but I'm not so happy to own Peloton. So large cap stocks of companies that have been around for a long time, that are kind of proven, that might be a better candidate. I don't like that because again, you're talking about stock picking. Where I do think this might be relevant is when, and this was kind of how I found out about SBLOCs in the first place, is that when I started really studying and looking at my stock portfolio, I used to have a financial advisor. I know I'm embarrassed to admit it. But before I fired him, I realized, okay, this guy has no clue what he's doing. I'm not outperforming the market. I'm not even coming close. And I'm also paying him a lot of money. So why am I using him? So I got rid of him, and now I'm stuck with this big portfolio of all these individual stocks, large cap stocks, and a ton of taxable gain in there. So, even if you're not beating the market, you're still, unless your financial advisor is just completely incompetent, you should still have significant taxable gains, over time with that portfolio. So I'm like, crap, what do? I don't want to sit here and lose all this investment return potential by these bad investments in these large cap stocks, but I don't want to pay a bunch of tax right now by selling them all. So you could consider doing SB locks for, the short-term strategy to unwind over time some of those large cap positions and put them into something like an S&P 500 index fund. But I wanted to mention it. You need to be very careful here. Yes, for example, I might be happy to own Apple stock right now, but do I want to own that 50 years from now? Is that company even going to be relevant? History tells us probably not, or, it probably won't be. It might be the best company to own right now, but it doesn't mean it's the best. It's definitely not going to be the best company to own 50 years from now. So you can do large cap stocks if you want to, if that's your cup of tea and you're just insistent on, doing stock picking, or you're doing like a dividend investment strategy, that type of thing. But you need to be very careful there with that. So that's why I have the little caution sign there, because I don't like that. That's not, in my opinion, the best way to invest in the stock market and the best way to use this strategy. Number 3 is businesses. So these are businesses that you yourself are actively managing. So, you don't even have to be actively working in the business day to day. You could have a CEO or a management team in place, but this is a business where you're in control. I'm not talking about, public companies that you own 0.0001% of, or even private equity investments or venture capital investments that, I like to invest in a lot of those, but I'm passive. I'm not involved in anything with respect to the company. I mean, I'm not on the board or anything like that. I'm talking about a family-owned business, a closely owned business. Either you're the sole owner, it's a very limited ownership, or you have effective control over it. This is a great strategy for buy, borrow, die if that is a business you would want to own long-term. So a lot of people make the mistake of saying, I wouldn't want to own a business indefinitely. So there's a lot of people who run really bad businesses, right? There's a lot of people who might have short-term success in businesses. You can, if you really understand a lot of the e-commerce companies and strategies they use, yeah, that's not a business I'd probably want to own long-term when you're just, buying goods at a low cost in bulk and selling them, with the markup. That's not really a business, right? That's not a business I want to own long-term. So if you've got a business that's sustainable, it's a brand, you're pivoting as you need to, you're not just kind of sticking to one thing, that's going to be outdated or mute or just not needed and, going to be rendered obsolete at some point. If it's a good business that, is sustainable, this is, I think, the best way to use the buy, borrow, die strategy. This is how Elon Musk uses it. This is how Jeff Bezos uses it. Jeff Bezos went out and started Amazon. And, it's not a family-owned or closely held business now, but it was his business for a long time. He had effective control of it, took it public, became a billionaire. And instead of going out and selling all his Amazon shares and paying a ton of tax on his billions and billions of appreciation, his net worth that he had, he did the buy, borrow, die strategy, and he borrowed against those Amazon shares. So you can do this too if your business is big enough. It can't just be done with any business, but it's a great, great strategy. Do not listen to the naysayers who say you wouldn't want to own a business for their life. You might just not want to own their business for your life. But if you've got a smart business strategy that you think is sustainable, why not use this strategy? The fourth one, and this one again is a really popular way to use the strategy. It's kind of obvious, is rental properties. So if you're going out and investing in rental properties, buy, borrow, die is absolutely a great way to use the strategy. A smart real estate investor is always going to extract out as much equity as possible from the properties because you get really low cost borrowing with your mortgage against the property. You want to start scaling up. You might borrow against property 1 to invest in property 2. If you're not able to sell the properties and do 1031 like-kind exchanges to avoid capital gains tax, you definitely want to be doing buy, borrow, die. There are plenty of rental properties that I would be happy to own indefinitely. So, I'm not buying a property maybe on the coast of Myrtle Beach and wanting to own that for the rest of my life, but I'm happy to buy, sustainable rental property somewhere else and own those indefinitely. All right, so let's talk about a little bit of maybe a more controversial type of asset to invest in and use buy, borrow, die. So I personally think that cryptocurrency in my opinion, or some forms of cryptocurrency are great candidates for buy, borrow, die. With that said, I am not going to step 2. I am on step 1 with cryptocurrency right now. I'm, invested years ago into Bitcoin, Ethereum, a few other, crypto that I think are, good candidates, not just these random things that, don't really have any use cases or make any sense. But, I've invested in these things. I think they're going to prove to be great investments in the long term, but I am absolutely unequivocally not borrowing against them right now. I think we are several years out from moving to step 2 of buy, borrow, die and borrowing against cryptocurrency. I know some people disagree and they're already doing it. I'm maybe a little too conservative for that at this point. I don't want to lose my Bitcoin. It is just extremely too volatile. And will crypto be an asset you want to own for the rest of your life, or own indefinitely, or own for 20, 30 years from now? We don't know. I think it's still too soon to, say that for sure. I am the biggest crypto bull out there, but I will still be straight up with you. I do not know if I want to own my Bitcoin and Ethereum for the rest of my life. I don't even know for sure that will still be in existence or be a thing or be worth anything. I think very, very strongly that it will be. That is my own personal opinion. I have done extensive research about crypto and about the specific types and, blockchain technology in general. And I am, again, I cannot say how I'm the biggest crypto bull out there on this. I think this is just, when you understand and the more and more you learn about Bitcoin, Ethereum, blockchain technology, crypto, and all the use cases and the good it could do for the world in general, then I think that, the more and more bullish you will be on crypto as an investment. So again, I want to be clear, I'm not borrowing against it right now, but I do plan to in the future when it becomes a little bit less volatile, a little bit more proven, it's been around longer. But you need to do your research. All cryptos are not equal. There are some out there that make absolutely no sense. And, there are some that just have absolutely, no logical proven, use cases behind it. They're crypto that just become popular and, like Dogecoin because Elon Musk pumps it up or something. But, make smart investments within the crypto space and be very, very careful about borrowing against it. It is not the time, in my opinion. I think we are several years out from that, but I still think it is a great candidate because I plan to own my Bitcoin and Ethereum for the rest of my life. I see my grandchildren, my great grandchildren inheriting, my Bitcoin and Ethereum many, many years down the line. And, I think at some point in the future, it will become a good asset to start doing step 2 and borrowing against. But be very careful with that. You need to know what you're doing. Do not get into crypto trying to make these short-term trades. The people I know who do that all lost money, right? So if you're thinking you're going to turn a quick buck on Bitcoin or Ethereum, you're almost always going to lose money because that's just the way, life works. So crypto is a long-term investment in my opinion. And I think that is why I think it's a great candidate for buy, borrow, die. At least it is for me. So last one, this one's a bit unique, is your personal residence. So if you're someone who owns your home, I'm very, very anti-home ownership, especially when you're younger in life and still building wealth and you're not quite to financial freedom stage yet. I'm very, very anti, buying a home instead of renting. But I recognize the reality that most of you own your own home and are going to go out there and buy a home or are going to continue to own homes. So if you do own your home, I think your personal residence, while it is not an asset, it is actually a liability. I still think it's a good candidate for buy, borrow, die because you can borrow against it at a very low cost. When interest rates are low, it's a great time to refinance and extract out equity. You never want to have a bunch of equity in your personal residence for a number of reasons, for, tax, investment, asset protection reasons. You generally don't want a lot of equity tied up in your personal residence. You can borrow at low cost, usually in low interest rate environments. And even now it's a lower cost, interest rate than you're going to get on anything else besides maybe an SB lock. And you can own that for life, right? Most people, a lot of people live in their home for the rest of their lives. When you die, your kids can inherit it, get to step up in basis, and they can turn around and sell that home without paying any income tax. So even though there is an exemption up to a certain amount for your personal residence, hopefully your personal residence has appreciated way beyond that so that you would owe some income tax on the appreciation. But if you use buy, borrow, die, you can just pass it to your children and they can just turn around and sell it because they probably don't want to live in it, or they can live in it if they want. But whatever, if your children want to turn around and sell it the next day, then, they're not going to pay any income tax on that gain. So these are just 6 assets that I think are good candidates, and hopefully they help you understand how buy, borrow, die works more in practice. But again, the key here is you're investing in sustainable assets that you can own indefinitely. And I think, most of these, or at least some of these on this list, are good things to think about that might be good ideas for you. Do your research, educate yourself on what you're doing, and find ways that you can implement this strategy in a way that you can build wealth while paying little to no tax. So hopefully you found this video helpful. If you did, please like the video and subscribe to the channel.